Traders, this is Igor from FxIgor YouTube channel, and today I will talk about trading the gold, and I will talk about tight zones that you can find and use in your trading strategy. So what is the main point? The main point is to find liquidity level. Liquidity level can be any important price action area for any assets where we can see the strong potential for stronger trend, breakout, excellent opportunity to enter into trade. So the first thing that we can do here is we can put indicator for supply and demand. Basically, they work very easy using the previous support and previous resistance, and if found some area where we have several resistance prices or several support, we can see the blue or red area on the chart. However, supply demand area is not only the only liquidity price levels or areas. The most common and the best area for tight zones and liquidity levels is previous day high and low. So I will just show you. For example, yesterday was the April 24. What I will do, I will find the lowest point, the yesterday lowest point, and the yesterday highest point. Now we have two red lines, represents yesterday high and yesterday low. The other thing that I like to find on the charts are important trend lines, because the trend line can be very important price level. So I will show you right now how we can find here. Usually I'm looking for a longer time frame. So we can find, as we can see, the trend line from the beginning of the year, just from February month, like this. However, we are so far from here, so we can use from the March trend line, starting from here. Now we have important price levels. Today, actually yesterday, we touched trend line, and after that the price goes slightly bullish. However, what we can see right now is very important in gold trading. It's tight zones, and that tight zones are usually I'm getting when I put yesterday high and yesterday low price level. So right now on the chart, you can see something that I want to remember. Do you see the last candle? This last candle just few minutes ago were a lot of above the resistance level. However, when our close, we see that it was just the wick and the candle didn't close above the resistance, above the yesterday high. So the whole catch of this story is that if you trade the gold, so this rule applies to all assets, but especially for gold, is always wait to see candle close. If you trade on 1 hour, 4 hour chart, daily chart, always wait to see candle close. For example, right now I'm watching 1 hour chart. As you can see, we have several dots here, several moments when price touched support and went to the resistance. And the interesting thing today is that today in the morning, price touched yesterday low, and after the yesterday low started to go up and try to push to the yesterday's high. The thing that I like to do is to find these tight zones using the daily low and daily high for yesterday and trade in that range. Why? Using the backtesting analysis, I figure out that there are not so many opportunities where gold price is going above the resistance and below support and keeps that very long. Of course, there is a moments for that, but the range market can be very long and very often. So I'm trying to use this tight zones of the gold and trade whenever I can. So the perfect example is this day. Yesterday we had a tight zone and the price is still in that zone. As you can see, actually from April 23 we are some kind of this zone. It go up and down, and we are still in this zone. And like I said previously, always wait to see the wick, what will happen with wick, and this is very important. In my perception, when you trade gold, it's good to watch the US dollar chart, or you can watch euro dollar, British pound dollar. You need to see all currencies against the dollar to feel the market and see the strength of the dollar. Today, as we can see, in the first part of the day, the dollar was weak, and in the second part of the day, the dollar is stronger because the good economic news. So in that case, we are still in this range and we can play in this range for a while. And this is the very good strategy. I know it's a boring strategy, but it can be very, very interesting to trade in this way, sideways, in some kind of the range, avoiding strong bullish and strong bearish trends. So what I want to tell you is always try to watch the daily chart and to see what markets can do in that case. For example, right now I'm out of trades, so I will not buy gold or not buy euro dollar, British pound dollar. I wait for a bigger pullback. Right now, I do not feel comfortable. I think that US dollar should be more stronger in next few hours, and maybe tomorrow, if I see the good opportunity, maybe we'll end trade. Right now, we should be, like I said, playing this range and wait what will happen. So this strategy that I just tried to explain is not something that you have rules, and if you follow the rules, everything will be smooth and fine. This is something that push you to do several things. The first one, always try to watch monthly, weekly, daily chart to see what's happening in that chart, to see the market, to see how markets perform, and go from the top to the bottom. Start from the weekly, then go to the daily, the 4-hour chart, 1-hour chart. This is very good practice. And put important price level like daily low, daily high, weekly low, weekly high. Put on the chart, trend lines, then you will have a clear picture and your ideas will be more clear. You will have the better edge, and maybe you will have the better success in your trade. So right now we see a bullish attempt for gold, but I'm skeptical. I want to see the daily close to see will this last daily candle stay bullish. Maybe we can see some kind of pullback, but we didn't see very long time any kind of stronger pullback. For example, here I can put Fibonacci to see, and one beautiful thing that exists is that the more bigger retracement is, the bigger trend can be from that retrace. For example, if right now gold just retrace a little bit more, then after that the gold has ability to be better and provide the bigger rising attempt. I know that video maybe was boring, not very interesting. This strategy is very boring, but I hope that maybe you will find some idea for your strategy using these tight zones in gold. I wish you a great day and bye bye.